Hello everyone, George DeSantis here with a look at the market for the week ending April 26, 2019. Before we begin, let me say that there are a few new people who will receive the email and so on. And I just want to explain that the format here involves just a quick review of the general market, looking at the S&P 500 as a good representation of the general market, stock market. And then we take a look at some individual stocks using some other software, the Shaking Analytics or TC2000. And so that's the way it is. Now, it's not meant to be advice to anyone to buy any particular stock. So let me bring up the disclaimer, and you'll see that that is explained here. If you need professional investment advice, you need to seek a professional investment advisor. I'm not one of those. I am a psychologist, and I do this for my own purposes. It helps me to organize my thinking for the coming week. And this is what I've started doing many years ago. And now I do it as a video. I used to type it all up, and that was pretty laborious. And so let's begin then by taking a look at the S&P 500. So we begin with a weekly chart of the S&P 500 as we usually do. Since, my friend Alex Elder says we should make our strategic decisions based on the weekly chart. The monthly chart is, you can't really trade it. It's such a long-term chart. But start with the weekly. We do make our strategic decisions based on it. And then we make tactical decisions based on the daily chart. So looking at the weekly chart here, one of the first things I like to look at, as you know by now, are the moving averages. I'll explain for the newcomers in a little more detail what I'm talking about, a little more detail than usual. But we have a 4-period exponential moving average in yellow. We have a 9-period exponential moving average in red. And we have a green exponential moving average, which is a 30 weighted, front-weighted moving average in green. Now, there's a 50-day moving average here in magenta, and then there is a 200-day moving average all the way down here. So on this weekly chart, we have the 4 above the 9 above the 30, 30 above 50, etc. And that typically represents an uptrend. So that's the first thing I like to look at. The second thing we might observe is that the parabolic, which I'm using with a new setting of these parameters here, because it tends to follow the market more closely than the usual default settings. The parabolic remains below the most recent bar, and therefore there is no indication from the parabolic that we should begin to think in terms of having a reversal to a downtrend. None of that yet. The other thing we look at is the Bollinger Bands, 2 standard deviations away from the mean, and the mean here is a 20-day moving average. So the Bollinger Bands are trending, the upper Bollinger Band is trending up. There's a little room on the upside, so we can conceivably go higher than this 2940 approximately. And notice that 2940 is exactly the high back in September when tariffs were first announced by the president and his administration. And since then, of course, we had this pullback. Now we rallied up again. So we are now sitting at that support resistance line. And the question then, of course, becomes, where do we go from here? Since we have such a nice looking weekly uptrend, I think the odds favor a further high than this. Now we calculated from a previous triangle a target of 30.50, and from what I consider to be a head and shoulder pattern, this is the head, this is a shoulder, and this is a shoulder over here. From this reverse head and shoulder pattern, calculated a target of 32.54. That's way out in the distance, but it is quite conceivable for us to get to 30.50 based on the triangle that we calculated earlier. So that's a scenario insofar as this part of the chart is concerned. Um, when we look at some of the indicators here, the moving average convergence divergence, or MACD histogram, we see that we are in bullish territory above the zero line. And in fact, the histograms are still maintaining the same levels as they did previously. So as far as Williams percent are, and I use a 30 period, the default setting is 14, but for reasons which I won't go into now, I use a 30. And we'll notice that when Williams percent are crossed above that magenta line, which is at minus 50, we started a new uptrend right here. Well, actually, the trend started a little earlier, but this was a good place to really get into the uptrend. This indicator developed by Jerry Appel, the same person who developed MACD, and by the way, he was a psychologist too. A lot of psychologists and psychiatrists involved in this business. So when we are above 4%, according to Jerry Appel, it's an indication that a new uptrend has begun. Well, you see the percent are the some of the rate of change tends to go up and down, crossing up and down above the 4% line here, which is one of the reasons I am beginning to think more in terms of the Williams percentar, which does not give you as many whipsaws as the sum of the rate of change indicator does. All right, RSI 12 on the weekly chart is a very good trend indicator, and here it is. It gave you a signal at this level here, at this level, that the new trend has begun. Not long after that turnaround here. So, folks, as far as the weekly chart is concerned, we have a nice uptrend in place here. Let's take a look at the daily chart. Now, on the daily chart, as we have here, a couple of things. Last week, we saw that the parabolic crossed above the most recent bar. This was last week's Friday's bar, a week ago Friday. And I said, look, if we get a pullback, it may be very temporary. And sure enough, that's kind of what we had. And so on the daily chart, we rallied from here, and the parabolic went below the bars now. And so there's no indication on the daily chart either to switch to an interpretation of a new downtrend. Let's quickly look at the other indicators. Moving averages, by the way, are still above each other here, so we have a nice uptrend. The other indicators, MACD remains slightly positive, just above the zero line. Williams percentar is above that 50% line at minus 50, and some of the rate of change indicator remains above 4%, etc. And Williams and RSI 12 is still above the 60% line. So all in all, weekly and the daily charts are indicating that we have we still have in place a nice uptrend, and we're looking to break above that resistance line of 29.40, which is where we're sitting now. And the coming week will give us some indication as whether we're going to do that. And here's, we take a look at some individual stocks. I'll start with the list that I own, but it doesn't necessarily mean that you should go out and buy these stocks, because obviously the capital I have is not the same as yours, and you have different needs financially and so on. So I'm just going through what I own, and you could take a look. Cadence Design, which is a stock I bought some time ago, is up 17% since I bought it. I bought 2,000 shares, and it's up 17%. So Cadence Design, I'm up $20,000. That's paid 10 times, at least 5 times for the subscription of $1,700. And by the way, they are now offering you guys a discount, and I'll get into that on the email when I send you guys an email. The people who get the email anyway. So you can see Cadence is still oversold. Money flow is still positive. Relative strength is still positive, and it's still considered very bullish. So I'm holding it. Let's go through some of these quickly. So Microsoft is another one that I own. all of these I own. Look at the money flow. The money flow is still very positive. It gapped up recently, and you can see these other indicators are it's very bullish, and it's outperforming the rest of the market. This is one that I bought recently, only very recently. It was oversold and it's up a little bit. And again, these indicators are indicating very bullish, etc. Avid, it's Avid Technology software company. It's become even more oversold, so I'm in the red on this one a bit. But you know, I'm still going to hold it because the money flow is pretty good, and relative strength is good, and it's still bullish. Fortinet, which is a security software firm, look at the buying. The money flow is coming in, institutional buying, and it's now becoming oversold. It hasn't crossed this 30% line yet, but it's becoming oversold. So I'm holding this, and for the same reasons I pointed out earlier. Relative strength is good, it's positive, and it's bullish. Google, you can see Google, money flow good. It's somewhat overbought right now. And these other indicators are looking, you know, very positive, right? iPay, I bought that recently. It's an ETF of payment systems like Visa, MasterCard, PayPal, etc. And so I own this. So I bought it some time ago, but it's up a little bit since then, about 2% or so. I like it because it's like, as my friend Terry would say, it's like being the bookie. Every time people spend money on cards, on Amazon or wherever they spend the money in bars or restaurants, you're the bookie. You get a little piece of the action. So I like that. But in spite of owning iPay, I own 3 of the other payment systems. One of them is MasterCard, and this looks pretty good. Little oversold, overbought rather this time. So let me get rid of these. Little overbought at this time, but the other indicators you can see are looking really good. PayPal, I love this one. I joined PayPal myself, signed up with PayPal. You can see that even though it's been trending up nicely here, according to the oversold indicator, it became oversold. And these other indicators here are looking good. Visa, well, that's one of my favorites. And you can see what the money flow is like. And it's still a little bit overbought, but this is a long-term holding. I owned it for a long time and then I sold it and then I bought it back again. Salesforce is neutral. It's one of the few that is the only one that's neutral really. But it's now looking much better than it did back here, and I still own it. You can see the money flow is increasing, and relative strength is looking good, but it's neutral. And Dell, you know, I love Dell, made a lot of money back in the 80s and 90s with it. And so I have it, and it looks like a nice stock to own here. Money flow is very strong. They don't have a whole lot of other indicators here. The other 2 indicators like relative strength, because it's a recent IPO. Dell went private, went back public. Let's look at something else. Now here's a list of stocks that the Shaken people recently recommended as their daily stocks to watch. Okay. Now you can notice that quite a few of these, well, about 4 or 5 of these are bullish, and you notice that iPay is one of them, and this is a ETF of the discretionary companies, consumer discretionary, and these are the ones. You can stop this video and take a look. And here's another list using the criteria for screening that Sandy Shaken uses herself. And again, you can stop the video, take a look at these, and then I will move to the bottom of the screen, and you'll see that many of the stocks that I own are on this list. You see, PayPal, MasterCard, SNPS, I believe I own that one. Microsoft, CDNS. So these are stocks that are all listed here by the screen that Sandy uses. Well, I think that's the end. We have about 15 minutes for this video, and that's enough for now. We can't go any further. Have a great weekend. Hope you enjoy the weekend.